Imagine that you are rowing your boat against the current. You are continuously putting effort but not going anywhere. Trading without a proper trading plan is like rowing your boat against the current. So in this video, I'm gonna show you step by step how to prepare a perfect trading plan. And also I'm gonna share my trading plan template so that it becomes easier for you to start. Now, if you're a serious trader, I would recommend you to watch till the end to see how to prepare a successful, profitable trading plan. Now, before I begin, make sure you smash the like button and also hit that subscribe button if you haven't done yet. This is ForexWizard from Forex Trading Wizard Academy. Without further delay, let's get started. So let's begin with. Now, as I mentioned earlier, I will link below this video in the description area a template that you can use to prepare your own trading plan. So what is the first most important element of a trading plan is the objective. Now, I know that I have seen many traders trading plan, many of them are missing this most important criteria. What is an objective? An objective is the reason for your trading. It is the emotional component of your trading part, why you are trading. So in that objective or the purpose of your trading, you must clearly define the goal behind your trading, or what do you want to achieve out of trading. As an example, the objective could be that in certain period of time you want to become a profitable trader so that you can quit your job or you can create an additional income for yourself and for your family, or anything that creates an emotional response inside you, because it is very important that you keep in touch with your emotions so that you can drive yourself towards the goal that you set for yourself. Where there is emotion, there is attention. So it is important that your trading plan have a clear objective defined from your perspective. Now, the next element of a trading plan is your trading style. Are you a day trader, swing trader, or a scalper? You need to clearly write it down, your trading style. Or are you an expert advisor trader or a manual trader? What kind of trader? You need to write it clearly so that you exactly know what you are doing. Many traders even don't know what is their own trading style, so they just gamble. So if you don't know what is your trading style, probably you are gambling too. So you need to know exactly what's your trading style, and you need to commit yourself to stick to that trading style. Probably you are scalping today, tomorrow doing day trading. So you need to know what kind of style you are trading. You can be a scalper and day trader at the same time, but you need to know your trading style. Probably you need different trading plan for a different style. Let's say if you are scalping and day trading at the same time, you need specific plan for scalping and you need a specific plan for day trading, so that you know what time you should implement which kind of trading plan. The next point includes in my trading plan is trading session. You need to know what kind of session you will be trading. Are you a New York session trader or a London session trader or Asian session trader or a mixed? A trading plan is your own constitution for your trading. So make sure that you write it down clearly what session you will be trading based on your personal circumstances, and then you adjust your timing to trade in those time. So the next element of a trading plan is time frame. Now this is where also many traders get confused. In the beginning also I did that. One day I trade on the 5 minutes, next day on the daily, and then 4 hour, and then 1 hour, jumping from time frame to time frame. this will just bleed your trading account. You need to have a specific time frame that you are trading, and you need to master it. For example, if you are a day trader, probably you're trading on 5 minutes or on the 15 minutes, but you need to know what time frame is your entry, and at the same time you need to know how to do the multi-time frame analysis and to bring down to that time frame where you are entering your trade. Now, it is not necessarily that you need to trade on 5 minutes, or it is not necessarily that you need to trade on daily. You can trade in any time frame, but you need to be sticking to the time frame that you are trading. If you are a 15 minutes day trader, try to stick to 15 minutes. If you are a 5 minutes day trader or a scalper, try to master that time frame, because every time frame behave differently and your psychology will be adjusting with that time frame. For example, if you are a scalper on the 5 minutes and suddenly you started to look at higher time frame on the daily and 4 hour, you might find yourself boredom and you might take a lot of trade on the higher time frame, because you are used to take lower time frame trades where a lot of trading opportunity, but higher time frame you might not find that many trades. So that's why you need to adjust yourself with a specific time frame so that you can master it, and you know that what time based on your trading session will be most profitable to trade. I will also create a separate video on that. Make sure you like the video and also subscribe to the channel. Okay, so now the technical part of a trading plan is entry criteria. You must have a specific entry criteria to enter a trade. So what is an entry criteria? An entry criteria is at what situation you will be entering the trade. Entry criteria could be a specific price action or any kind of zone or a key level, or based on your specific strategy, in what situation you will be entering the trade and what kind of candlestick pattern you want to see before you enter the trade. It has to be clearly defined in the trading plan. You need to write it down and clearly define what kind of entry criteria that you want to see before you entering the trade. It is very, very important that you write it down. If possible, you can take a screenshot of certain kind of candlestick pattern and paste it on your trading plan so that you know exactly these are the candlestick pattern or the criteria needs to be fulfilled before I jump on the trade. The last thing that you need in your trading plan is exit criteria and risk management. Now, what is an exit criteria? Now, I know that everyone is very enthusiastic of entering the trade, going very crazy of finding a good trade, but very few things about the exit criteria, because if you are not maintaining that, then you might find a very inconsistency in your trading. When to exit is also a very, very important, because it might take your profitable trade turn into a losing trade if you don't know when to exit the trade, when to take profit, when to move a stop loss at entry. These are the most important part of a trading plan as well. So make sure that you write it down clearly, in what situation, how much will be risk to reward. You will be taking bigger profit, like 5 times profit or 10 times, or you wanna make it 2 to 1, like 2 times profit, 1 time risk, or you wanna just make it flat, let's say 1.5 times risk to reward, or minimum risk to reward that you wanna tolerate. Probably you may not be willing to take a trade less than 1 to 1 risk to reward. So you can write it down clearly that these are the risk to reward that I will be going with my trade, and below this risk to reward I will not be opening any trades. So you need to write it down. Once you write it down and read it out loud every day, that will help you to remember everything in your trading plan. The last thing, but the most important thing is risk management. All right, risk management is the key component of a profitable trader. So you must have a risk management plan, and in that risk management plan you need to know what will be your lot size calculation system. Do you have a lot size calculator? You need to write it down that I will not be opening any trade randomly without understanding the lot sizing and how much percentage of risk you will be taking per trade. You can write it down either 1%, 2% or whatever, and also you need to write down how much total risk you can take on a single day in your trading account, or how much the maximum risk exposure of your trading account at the same time. It will help you to understand when not to open any more trade. For example, you have opened 5 trades, all of them, still none of them is break even, but you are risking each trade 1%. So after 5 trade opening, you are having 5% exposure on your trading account. Now you can write down on your trading plan, okay, in a single day I will not be risking more than 5% of my trading account. That will help you not to over trade or not to FOMO trade, because you have a trading plan and you know that this is your criteria and you cannot go out of this criteria. Now once your trading plan is ready, it is always a good idea to read it out loud every single day. I read my trading plan every day before I sit down on my trading desk, so that it reminds me today what is I should be doing and what I should not be doing. So even you can print it out, put it somewhere on the desk. That will help you to stay in control of your trading account, so that you are not blowing out and you are making consistent profit every single day, so that you can fulfill your objective of your trading plan. I strongly believe that you found value in this video. If you also want to know more about our trading strategies that we are teaching every single day in Forex Trading Wizard Academy, also you can consider joining us. Link below this video in the description area. And thank you. I'll see you soon in the next one.